Hi everyone, welcome back to Be Rich. As I promised, I know that video was not so great. Me sitting in Dubai in the airport in a corner trying to get some conversation with you. But I had to do what I had to do because I just wanted to get some news out to you because it is really very interesting what is happening with gold. Because a lot of you are having serious FOMO with gold and you're thinking, oh my God, I'm missing something very vital and important here. I better go and catch my local jeweler and buy another few more grams of gold. I'm here to tell you to allay those fears and say, don't worry, don't imagine these things, and it is okay to let sometimes prices ride out as far as gold is concerned. And there's reasons why the price of gold is going up. And I thought no one else can answer this better than Anand. So I managed to pull him in from his busy schedule that we're back from Dubai and have a conversation about why gold is doing what it's doing. And is it something we should be alarmed about? Should we be having a lot of FOMO and run to the jewelers, as some of you are doing? Or should we be more cautious and prudent and be calculative in our investments in gold? That is a conversation I hope to have with Anand. And hopefully by the end of this video, you'll have a lot more clarity than you are having right now, watching this in anticipation. Yes, Anand. So why is this gold happening? Scary.
This is really after a long time. This is nearly after 40 years. The last time this happened was in 1979, where just gold went through the roof in a single year. But the difference between last time and this time is there was a man called Paul Volcker there, the federal chief then. And the Federal Reserve was not so much in the crossfire
With the president.
with the president as it is today. The Federal Reserve kept on increasing interest rates and made sure that Jimmy Carter would lose the elections. One of the main reasons why Jimmy Carter lost the elections.
But it wasn't politically motivated, right?
No, I'm saying because the market was very high and there was a lot of, even before Carter won, there was inflation.
Yes, the main reason why Volcker did what he did was because of inflation.
Yeah. So even today, there's a lot of inflation. Though the official measure is somewhere else. But even by the official measure, for almost more than a year now, inflation has been extremely high and will continue to be high for some time. So it is impossible for inflation to come down and also for interest rates to come down at the same time. Looks like interest rates are coming down and the Federal Reserve is under enormous pressure to bring down interest rates.
Correct. Because if someone like Trump was the president at the time when Volcker was there, I hardly think Volcker would have been able to ratchet up the interest rates the way he did back then.
No, I wouldn't. I would have been very sure he would have ratcheted it up. But here, the Fed's preferred gauge itself has changed. In in those days, the Fed was not responsible for employment being low, but today the Fed has two goals. One is to keep unemployment at an acceptable level and also manage inflation. Both are polar opposites. If interest rates continue to go up, then inflation will come down, but economic activity will also come down and growth will suffer, so jobs will also suffer.
Makes sense.
If the Fed decides to keep
Cool off interest rates.
job rates in very manageable level, it has to cool off rates much faster. At this time, the Reserve is talking about problems in the job market, but inflation is still at 2.9%. The Fed has already cut nearly 1%. So the further expectation is that the Fed will cut interest rates. This is because of tariffs and other problems created by Donald Trump. Hardly for reasons of economic reasons, a lot of jobs are being lost.
But one small doubt I have this. When interest rates are being moved up or down, it has a direct impact on money supply, which has a direct impact on inflation.
Yeah,
But this direct impact on job employment and employability cannot be controlled by the Fed by controlling liquidity. I mean, it's hoping by creating liquidity in the market.
no. What it hopes is by cutting interest rates and increasing liquidity, people will borrow and employ more people.
Exactly. So
So
the
it
hope
is
is that people borrow more because it's cheaper to borrow, and businesses will employ more people.
yes, but that will increase inflation.
Correct.
At this time, this is not a problem
No, but my added
because already growth is very high.
huh,
So by adding more people when growth is high is not going to solve the problem.
correct, because like you rightly said, by creating more liquidity, you cannot control what people do with that extra liquidity.
Exactly.
Yeah,
So
so people might, looking at the current scenario and the uncertainty which is there geopolitically and macroeconomically, people might be more inclined towards running after safer havens,
so
taking
that
that
is,
liquidity.
but what is happening is because you are cutting interest rates, the value of the dollar has fallen against the euro, against the franc, against with the British pound, and because the value of dollar is falling, the value of gold is increasing.
So a lot more money now is chasing gold.
Yeah, and also what has happened is because of the fact that Biden decided to freeze a portion of
Russian
Russian reserves,
dollar reserves,
dollar reserves. The people who are ideologically opposed to
American ideology.
American ideology are refusing to store dollars and are storing gold instead.
So small central banks, developing country central banks, who have now historically looked at American
It's
ideology,
not only small central banks,
huh?
it's central banks as big as Russia and China, which are keeping their excess supply in terms of dollars, have decided to dump dollars and started to store up on gold.
But China still holds massive amounts of.
Yeah, but then it's not growing.
Okay, it's not expanding.
Yeah, whereas American dollars is expanding at the rate of 7-8% per year. So, and that extra dollars, which is going into Russia, China, and the rest of the world, has to be absorbed.
Okay,
So,
now
people are selling, not only buying gold, and selling when giving increased dollar supply and buying gold. So, the dollar is losing value and the gold is increasing in value.
okay, the mill of all this high octane cocktail mix of chaos which we are having, you throw in government shutdown into this. What happens?
So, there is more uncertainty. And in France is struggling. France is unable to
Keep a government.
keep a government steady. All this is adding to instability and pushing up the price of gold further.
Correct. Recently, also, I think another European country has managed to elect another Donald Trump for themselves.
So things are going to get far worse before they get better.
Yeah.
And so this is why Goldman Sachs is saying
Huh.
by the end of the year, that is end of 2026, not 25.
That means
Yeah,
around 18 months from now. Less than that, around say
there's
15 months from now.
another 13, 14 months from now,
Huh.
gold would have shot up another 25 to 30%.
Baap re baap.
And be available between 4,800 to $5,000 an ounce.
My goodness. But then, should we all be just running towards gold and dump equity?
No, I am not saying that. But if you are looking for safe haven, like I said, if you don't have 400 grams of gold, please look at accumulating 400 grams of gold. If not 400, at least 200 grams of gold. So my idea is that for safety, gold is good. At least move your emergency money into gold.
Correct. So, what Anand is trying to highlight here is he's saying, yes, because of all this uncertainty, gold, even conservatively speaking, is going to go through some record numbers by the time we're done the next 18 months. But at the same time, he is saying, don't take and throw the kitchen sink at this. Be prudent. Whatever is extra cash which is lying around, which you need probably in a year or two, consider gold. If you have emergency money, which you're just keeping on the table, in case of an emergency, you can keep it locked up in gold. Or if you have some personal requirement, let's say you're getting married or you're planning to propose to your girlfriend, like Arun over here, then you can definitely think about buying a gold ring or a gold chain and keeping it locked up if you need it to be consumed in the next 24 months or so, because that will be a wise decision to make. Other than that, 10 years' time, 15 years' time, Trump will be long gone, Putin will be long gone. Most of these world problems we're facing, other than climate change, probably, most other things will be long gone. And they will be in the rearview mirror. And at that point of time, equity will always trump what gold can deliver in terms of returns. So I hope you have found some, some food for thought in this video and gave you some idea on what you should do with your money and how you should play gold for the next few more months to come. Thanks for watching the video as always. It was fun talking to you guys, and it was entertaining having Anand back in the studio after our sojourn in Dubai, where we met some of you and we had some great conversations. Like I've said many times on this channel, if you're interested in American stocks and Japanese stocks, which is our bread and butter on this channel, do catch my Instagram channel. In my profile, you'll find a Google link and fill out that form saying, hey there. And I will try and have someone from my team in Dubai reach out to you and help you get sorted out with our US and Japanese stock advisory. Thanks for being with me and Anand today on Be Rich. And we'll see you again tomorrow with another one. Thank you.
Thank you for supporting us.